welcome back to another one of my cryptocurrency update videos. I hope you're all doing good. I'm covering XDC today, starting on the weekly time frame, and we can see here that our weekly close ended pretty safe actually. Obviously last week was a bit of a roller coaster, like we wicked all the way down here. We came into this box here where we've had some wicks in the past and we broke out of our triangle, and what happened is for the rest of the week, the last part of the week, we ended up creating a spinning top candle here and actually broke back into our symmetrical triangle pattern for XDC. So we're still heading towards the apex. The apex is just the end of a pattern where a breakout will be forced. Either which way, we don't know that yet, but it is respecting the support line very, which is very key at the moment. Obviously, if we lose this, then we're heading down to lows of down here. So as long as we're holding this support line here, we should be good. As long as we're not breaking in or out of this triangle pattern to the downside, we should be good for continuation. Now it looks like we want to, what I'm thinking now is we're quite overextended from our moving averages, so we could see a retracement up for XDC, and that's going to be the point where, right, are we going to go up or down once we hit this area here at about 0.066 cent? Because that's when we'll hit our moving averages, hit this key point here, and we could just retrace up before continuing down. And that's what we don't want to see. We want to see a clear break of this level and these moving averages to know that, yeah, okay, we're going to continue up. But now we do have this wick to the bottom here, which shows to me that it doesn't want to go down there. I can do a fib from swing high to swing low. Then we can get some areas where we need to break above. So our first area to break is 0.061 cent. Once we've broken that, then we're going to hit this next support line here. So we could end up retracing back down to the area, or we could just push straight through, and our next level would be the 382 here, which we should be able to get through quite easily once we've got above these moving averages. Obviously then we come into our golden pocket between the 5 and the 618, and we know that the 618 is the most key. Once we get to 10 cent there, we must be getting above and holding that level of support to confirm any further upside, because we can retrace all the way back up to the 0.618 here, but if we don't break that and we use it as resistance, that's when we could see further downside. So once we get above that 0.618 and above that 1 fib level at 19 cent, we'll be on our way to hitting the 1618 at 49 cent, which obviously would be incredible. That's some higher time frame targets for you guys to the upside. That's for the weekly time frame. For this week, we just need to be staying in this triangle basically. So let's have a look at the daily. And we can see here that this breakout here was more of a fake out really. I know that the candle actually opened here, but we did completely invalidate this whole downside move here by faking out. So you would kind of ignore this whole area basically as a fake out and just be looking at this, and we actually have just retested the bottom here. We've retested support. Are we going to continue up? Well, first we need to break above our 20 moving average, which we use as our trend line. And as we know, we've been respecting this line very well. So hopefully we can break above that, or we could see us retesting it to come back down to this support again. But if we can break above, we'd then head up to the 55, which we could see a bounce back down from, but that's totally normal. That's like the next target point once you've broken above your 20, and to get rejected from it is pretty normal the first time. Healthy retracement down to hopefully plow through it the next time. I don't know why I said plow through it, but there you go. So let's have a look at some fibs on here. I'm just going to go from up here to down here, just a set of smaller fibs here to see. Yeah, so we've just hit the 5 fib level, rejected that, so we could come back to test the 382, which is totally fine. Obviously, hopefully, once we're in this golden pocket area, which I will draw a box there just to show us that this is an area more than 2 separate levels. So if we get in this area, hopefully we can see a breakout up to the upside here. If not, we could end up coming back down and just kind of consolidating in between these two areas for a while. So 0.057 cent is the area we need to get above to bring us up to the one above both of our moving averages and continue to the 1618. Hopefully then breaking out of our triangle pattern on the weekly time frame. That would be amazing to see. And I'll just have a quick look at the 4 hour and then I'll go. So yeah, as I said here, once you get, so we've got above our 20 moving average, we hit our 55, we didn't really manage to hold above that, so we've come back down, and now we're coming back to test this previous low here, which is totally normal. We've had a push up, coming down to retrace, hopefully then to have a bigger push up into our golden pocket area, into this key area, which you can see here. Once we do break into it, we do have quite a bit of consolidation period here. So as long as we can hold this area for a good amount of time, show that we're finding support for us to break out, then we'll definitely be good to go hitting those fib targets on the daily time frame. But yeah, that's it for today, guys. Just subscribe to my channel, like and comment down below, and I'll see you in the next one, guys. Bye.